Hello, Super Saver. I hope you're healthy and well. Here's my shining light to you this week. My personal list of the 8 safest banks to keep your money right now, including the one I moved the vast majority of our personal and business accounts to this week. Here's what I'll be covering in today's video. The 4 different types of banks our Super Saver community uses, some of the key ways industry analysts determine the health of a bank, and how and why we chose the banks on our personal list of top 8 safest banks in the US. And at the end, I'll even give you a bonus, safe option number 9, to add to that list. Unless you keep your money under your mattress, and I wouldn't be surprised if some folks did after the financial month we've had so far. But for most of us, we'll use at least one of these 4 different types of banks. 1. National banks like Chase, Citi, or Bank of America. 2. Online banks like Capital One, Marcus, and Ally. 3. Regional and or community banks like PNC and Citizens. And 4. Credit unions like Navy Federal Credit Union and PenFed. And yes, I know credit unions are not banks, hence the quotation marks here. But it was easier to use the term banks than financial institutions throughout this section. Anyway, generally speaking, each of these 4 groups of banks offers different advantages. National banks are accessible across the country and offer a wide range of products and services. Online banks often have no or low fees and 0 minimum balance requirements, and they offer higher savings rates. Regional and or community banks also offer competitive fees and rates, and in addition, a more personalized customer experience, whether that's online or in person. And credit unions, they offer similar benefits to regional and or community banks, namely competitive fees and rates, as well as a personalized customer experience. The primary difference between credit unions and these other banks is that credit unions are wholly owned by their members and customers and are not run for profit. Now, these advantages are all fine and well in normal times, but these are not normal times that we live in currently, as we've seen from the turmoil in the banking sector in just the past few weeks alone. So it's no wonder that so many super savers in our community are wondering how safe their bank and or credit union is, which brings me to some of the key ways industry analysts determine the health of a bank. There are many ways of looking at a bank's balance sheet and profit and loss statement, but for the purposes of this video, I'll just list the 5 most important numbers or factors that industry analysts use to determine the health of a bank. First is the profitability of a bank, how much money it makes, and how large are factors like the net interest margin, or NIM. The NIM is the difference between what the bank pays its depositors and what it charges its loan customers. Second is provisions for loan losses and other potential losses. For example, how much the bank has already set aside to cover likely future losses on its loans, because not 100% of borrowers will pay back 100% of what they borrow. Third is capital and liquidity as a percentage of the balance sheet, meaning how much money is available to cover any additional losses from bad loans and other misadventures a bank may experience and that are not already covered by loan loss provisions or similar reserves. It also includes how much money is readily available in liquid cash. Fourth is any unrealized losses on held-to-maturity securities, which is a loss that a bank would incur if it had to sell its treasury or other debt securities before maturity, say because depositors are withdrawing money at a faster rate than the bank has liquid cash for. Note that in good years, a bank may also have unrealized gains from held-to-maturity securities as an additional reserve. And fifth is the bank's credit rating by independent rating agencies such as Moody's, Standard & Poor's, and Fitch. Now, all these factors are useful, and it's good that you have an overview of what they are because you'll hear a lot about them in the press if you haven't done so already. But they alone don't necessarily tell the full story. Plus, they're often more historical and backward looking, and therefore of limited use when you want to predict what will happen when there's a bank run or sudden loss of public and depositor confidence, as we saw from the case of Silicon Valley Bank. Because these 5 factors, profitability, provisions for loan losses and other potential losses, capital and liquidity as a percentage of the balance sheet, unrealized losses on held-to-maturity securities, and credit ratings by independent agencies, they were publicly available in SVB's annual report and other public information about 2 weeks before they collapsed, and some even longer than that. And yet the run on SVB came suddenly and surprised everyone, and we know of no one who predicted this bank run. And this 5th one here, in particular, the credit rating that's supposed to predict whether a bank can pay its future obligations, wouldn't necessarily have helped much in this case either. SVB was only publicly downgraded on the day that their stock was halted, and the FDIC shut them down. Like I said, good to know that these are some key ratios used by industry analysts to determine the health of a bank, and always good to understand what they mean and indicate when looking at a bank. Plus, it'll make you look and sound so much smarter at this year's Memorial Day barbecue. But in real life, and in our perspective, there's a much simpler way to figure out the top 8 safest banks based on what's happened so far. What we've learned from the recent bank failures is this. Ultimately, what makes your money and my money safe when it really comes down to the wire, when it really matters, is in one word, government. Or to be more precise, 2 words, government backing. We've talked a lot about FDIC insurance and the Deposit Insurance Fund on this channel already. So all the Diamond Nest Egg regulars already know, make sure you bank with an FDIC insured institution and stay under the FDIC threshold of $250,000 per depositor per FDIC insured bank per ownership category. Because as we've mentioned in a previous video, just because the government decided to protect all depositors at Silicon Valley Bank, even those who had deposits above the $250,000 FDIC limit, there is no guarantee that they'll do this again the next time around. Now, if you're new to us, then check out these FDIC videos on how to protect your money at your FDIC insured bank during these uncertain times. I've linked them in the description below. Our list of 8 safest banks has more government backing than just FDIC insurance though. They're what's known as GSIBs, Global Systemically Important Banks. In layman's terms, these are the banks in our country that the government will do everything they can for as long as they can to keep them from going under. The reason being that one of these banks failing may draw the entire banking system into the next global financial crisis and the real economy with it. And no one really wants that. GSIBs are subject to stricter regulation. For example, they're required to have more capital and liquidity on hand than non-GSIBs. GSIBs are also subject to higher supervisory expectations, such as how they manage risk, governance, and internal controls. And risk management, governance, and internal controls in the current market environment is even more complex given the uncertainty around inflation and the pace and direction of future interest rate hikes. Silicon Valley Bank, they didn't even have a chief risk officer for the last 8 months of 2022. Like a friend of mine said the other day, comparing the risk management team of SVB to the risk management team of a GSIB is like comparing a crop duster to an F-35 fighter jet. And no offense to crop dusters, we love that Pixar movie about Dusty the Crop Duster, but you get the picture. Because while Silicon Valley Bank was important to Silicon Valley and the general VC-backed startup community, it was very far from a global, systemically important bank. And that's why it was not subject to the heavier regulatory and supervisory requirements that the GSIBs are. In fact, even as the 16th largest bank in the US, SVB was 15 times smaller in terms of consolidated asset size at the end of last year than the top-ranked GSIB, Essentially, the number one bank on our list of top 8 safest banks to keep your money right now. There is an official list of the US-based GSIBs provided by the Financial Stability Board, and they're ranked according to buckets. The higher the bucket number, the more globally relevant a bank is, and the more capital it needs to have on its balance sheet. Bucket 4 at the very top is the GSIB that holds the most additional capital in percentage terms in its coffer, meaning it should be most able to digest and manage financial losses and external shocks. Bucket 4 needs to hold an extra 2.5% of capital above and beyond what other non-GSIBs are required to hold. And in this bucket, there's only one bank across the globe. It's JP Morgan Chase. In bucket 3, with an extra 2% of capital, and ranked just alphabetically within the bucket, we have Bank of America and Citigroup. In bucket 2, with an extra 1.5% of capital, we have Goldman Sachs. And in bucket 1, with an extra 1% capital, we have in alphabetical order Bank of New York Mellon, Morgan Stanley, State Street, and Wells Fargo. For those of you who want to dive deeper into these bucket calculations, I've included the Financial Stability Board's link to this 2022 list of global systemically important banks in the description below. Because what the government has shown us in this crisis with the rescue of significantly smaller Silicon Valley Bank and Signature Bank is essentially that if they're willing to save those smaller banks, those non-GSIBs, then they will surely not let these 8 leading GSIBs fail. In this crisis, bigger is better because these 8 GSIBs, they have more resources, more risk managers, more experience, and more capital to weather this inflationary and presumably still rising interest rate environment. And they also have more regulators looking over their shoulder to make sure that they are handling our money properly. And for those of you who are really, really worried about bank failures, but not so much about a US default, here's the bonus safe option number 9 that I promised you at the beginning of this video to add on to this list of top 8 safest banks in the US that we just went through. Treasury Direct's Certificate of Indebtedness, C of I, a treasury security that does not earn any interest, but is liquid if you need cash. The easiest way to think about the C of I is like a 0% savings account held at Treasury Direct from which you can transfer funds out of and into your designated bank account when you need it. According to the Treasury Direct representatives I spoke to earlier this year, as well as the super savers in this community, it usually takes 1 to 2 business days for the funds to arrive from the CFI into your designated bank account. To purchase a CFI, just log into your Treasury Direct account, click on Buy Direct, and then select CFI. There is a maximum limit of $1,000 per transaction in this instance. And as I mentioned, the CFI pays no interest, but you can park your money there without worrying about a bank default, broker default, or whatever other type of default might pop up in the coming weeks and or months. And if you trust the US government's full faith and credit, your money is as safe as it can be directly with the US Treasury. It also has the added plus of being a readily available source of funds if or when you want to purchase your next tranche of I-bonds or other Treasury securities. As for us, we did not go with the CFI option because, well, I'd still prefer a little interest over no interest at all. So we spent the better part of this week moving our personal and business accounts over to JP Morgan Chase from some non-GSIB banks. Not because JP was at the very top of our personal 8 safest bank list, although that didn't hurt. We actually looked at Citi, Bank of America, and a few other GSIBs as well. But JP just had the most convenient branch locations for us. And yes, surprise, I'm that type of girl that occasionally likes seeing a person in a branch for a face-to-face discussion. And from the line of folks I saw trying to open up accounts after me, I clearly wasn't the only one. Or maybe it's just me. My husband always tells folks who line up behind me at the bank or supermarket,
I wouldn't do that if I were you. She's going to take a while.
I mean, what can I say? My brain's generally loaded with money questions and my shopping cart with lots of groceries. Anyway, Now, I'm not saying that everyone should run out immediately and open an account at one of these 8 GSIBs or park their cash in $1,000 increments in a CFI account with Treasury Direct, because everyone's financial journey is different. We all have some compelling reason or reasons for who we bank with, and some of us have built great relationships over time with our bank and our credit union, something that should not be discounted. But if you continue to find yourself super nervous and or tossing and turning at night, either because you're above that $250,000 FDIC threshold, or even despite staying below that threshold, then it might make sense to take a closer look at one of these GSIBs. And if you do, make sure you check them out online first, because at the time of this taping, some of them were offering sign-up bonuses for new customers. As customary, this video is based on data, analysis, and our perspective of what's happened so far, and does not guarantee any future outcomes. It is not sponsored by any of the financial institutions mentioned in this video, nor do we receive any compensation if you choose to do business with any of the banks on our personal list of top 8 safest banks to keep your money right now. And for those of you wondering what else we've done recently to best protect and grow our hard-earned savings, as well as some of our clients' hard-earned savings during these uncertain times, check out this video here on the top 5 money to-dos right now. All right, Super Saver, I hope you found this list of the top 8 safest banks in the US, these 8 GSIBs, helpful. As always, if you enjoyed this video, then don't forget to share with those you care about, and of course hit that thumbs up, and see you again very soon with another brand new wealth building video.